Hey guys, welcome back to another Sunday video. Every week I take a look at the markets and I look for potential setups that I'm going to be watching for in the week coming or the week ahead. We are taking a look at a couple different things today. We'll try and take a look at some currency crosses, some commodities like gold, as well as the S&P 500. Of course, I'm going to start where I currently have a position open. I do have a trade open long on the S&P 500. It is currently in the red as I bought it right around this green zone here, and my stop loss is just below this previous low here. So my stop is about here, entries about here. So it's not going too hot, but my thought process with this is the S&P 500 has been putting in these higher lows, looking pretty healthy, and this is basically the line in the sand for me when it comes to the S&P. So if price breaks through here, I will be out of my trade for a loss. So that's something that I'm watching here this week to see if this level can hold. I do think that there's a solid chance that these support levels should try at least. I mean, we've seen a little bit of a response here, but again, what I'm looking for is a return back to the highs and perhaps even beyond. We'll see if the market decides to do so. So that's a trade that I'm personally watching. Now let's take a look around the room and see what is going on with some of the major currencies. So of course the dollar, a good place to usually start is just taking a look at the dollar, which has really fallen out of favor when it comes to the currency market. Many of you guys of course, have been trading for a while, and you've probably seen for a very long time the dollar just be so red hot. And this is the weird thing about Forex is, you know, I can remember times where the dollar has been crushed. I've been remembering, of course, the past year or so where the dollar's been so strong. Things come and they go, and things change in markets very, very normally. Like it's just a thing that we've seen for since the markets have begun, right? And what we've seen recently is this dollar gave you a little bit of a warning in hindsight with these lower highs, and then broke out pretty significantly right here. Since then, we've seen nothing but pain for the US dollar, with every little rip getting turned into a seller's point. So for me, until that changes, the dollar now actually looks bearish, and it is for a couple reasons. We could go into the fundamentals, the basic fundamental analysis tactic. I would say the big one that most people are talking about is, of course, the fact that the Federal Reserve has been raising interest rates. In fact, they're scheduled to raise interest rates again this week. The question is whether or not it will be 0.5% or if it will be 0.75%. And this is the whole conversation around the dollar. Currencies move heavily based on what interest rate decisions are for that underlying central bank and their economy, right? So when you have the dollar recently raising interest rates like crazy, but then they start seeing inflation cool and the potential for this to slow down, there's that potential, okay, is this ship turning, right? Is the dollar train slowly, you know, grinding to a stop and potentially even turning around? And so that's kind of been the narrative recently, which has caused some dollar weakness. And I think that until that changes, right, the idea is just going with the flow. If you guys know my style, you know I am a trend follower. I just go with the flow when it comes to markets. I find it very hard to try and call that turnaround point. Rather, I just try to go with the flow once it begins. And so recently the dollar has looked very, very bearish. And for me, what this means is that as long as this thing is rallying, there's probably room for more sell side. And the idea there, actually, if we expand out, you know, we've retested this area of support. This level recently has been a pretty key spot for dollar bulls trying to hold this area recently. But if this level breaks, you have so much room to the downside to continue to slip. You know, price could come down. A key notable spot was this 101 level. And again, we are sitting right around 105. And yes, it seems like it would be crazy for that move to occur. But again, the dollar is quite, it's moving quite a lot recently. So when we look at the dollar, you know, if this level of support breaks, I'm going to get this off my chart because it's a big messy zone, more of a daily chart zone. So if this level comes back down into play, if this level breaks, you know, you could see more swing to the downside, right? And that's of course a mile away. That's a big move to consider. But even if you're just looking at it, okay, if this thing rallies, you may still say, okay, well, I'm bearish, so let me pick it up on the short side. And of course, if you're shorting the US dollar, you wouldn't just trade DXY, you would actually probably trade a currency pair. So let's take a look at some of the currency pairs that are impacted by this. And I actually would like to show you guys something that caught my eye here, which was NZDUSD. USD. This thing has a strong buy rating, or sorry, a buy rating right now. But two things now we can take a look at on the Edge Finder. This is where I build my watch list. We've renamed this, by the way. The watch list section will show us the most biased currency crosses as well as commodities, like you've got oil on there, US 30, things like that, right? So we've got the strongest and weakest bias here now. And what this does is, if you're new to my channel, the Edge Finder is something that we use to help scan for better trading setups. And if we look across the board, you've got things like the COT data, retail sentiment, seasonality, trend reading, GDP, inflation, unemployment, and interest rates. Combining those fundamentals and sentiment analysis has given me a lot of synergy in my trading, and it's been a key component to the trades that I take for the last 2 years since I've really started using this methodology, and in the last 6 months since we built this software tool. I run a company, we build software tools for traders, and so this is our product. And so the two that stick out to me with the dollar right now are NZDUSD and USDCAD, both of them on the long side. So let's actually start with USDCAD. So looking at USDCAD, again, with a dollar bearish perspective, this one's a little bit mixed because this one has a buy rating, and this is actually probably going to be a bit confusing because it's actually the CAD that's even weaker than the dollar right now. And so for this one, this is actually a dollar bullish thesis, or at least a bullish against the Canadian dollar. So this is probably one that I would be hesitant to take myself right now, where we currently sit. But if we got some pullbacks, again, favoring the dollar over the CAD, whoops, wrong thing. Favoring the dollar over the CAD might actually generate some nice opportunities. You can see it already pulled back. The trade might have already passed. So take a look at this. Price shot from the low to the high, pulled back to the 38.2, past resistance became support. Beautiful, right? Simple technical analysis. This is the bread and butter sort of approach that we use over and over again. And you combine that with fundamentals and sentiment, the synergy can be really powerful. So again, price held there. So what's next? Well, you may get an opportunity for this thing, if it stays in consolidation, to retest this area, in which case maybe there's a second chance on the long side. Or scenario number two would be if price actually breaks through past resistance here and repeats the process that we saw in this little capture, right? There may be an opportunity to go long again on the dollar CAD on a break and retest. So that's one idea for you. Now let's flip the script and say, well, what about if we're super dollar bearish? Well, dollar bearish here, NZDUSD looks beautiful for long side continuation, in my personal opinion. So if I'm looking at this thing on the daily chart first, we'll do a little top-down analysis. You can see very clean upward trend. And, of course, if you're looking at this thing and you're a breakout trader, you trade the other way, then sure, maybe you're waiting for the opposite. You're waiting for this thing to fail. And we don't know if that's going to fail, right? Again, if you were betting for this thing to fail, you've been in a lot of pain. So for me here, my goal would be to go with the flow here. So when we look at something like the 4-hour chart and we zoom in a little bit on this recent price action, you can see there's also been some beautiful opportunities here on the breaks and retests. This one never quite came. Honestly, I would have missed this trade. In fact, I did miss this trade because I would have liked this at the 61.8. Price didn't give us that option. It just rallied on without us. So a little bit of a tough one there. Of course, it happens. So what's the next scenario for something like NZDUSD? Well, zoom in here. We can highlight, of course, the past resistance point here that we actually tagged on Friday before finding a little bit of sell pressure on the 4-hour chart. So if you're watching this, maybe you're looking for, again, similar to dollar CAD, a scenario in which the dollar gets weak and we see the New Zealand dollar against the US dollar strengthen. And in that case, maybe there's something like this, breaks and retests. And I think in this case, we could talk a little bit about stop loss placement as well as, where we think this thing could go. And I think what you'd be looking for is, it just depends your style, because again, when I make these videos, I try and make them friendly to both swing traders and day traders. But for the swing traders, right, we have a little bit more room. I mean, this is about a 75 pip stop loss, which is reasonable for swing traders. That's not that bad, right? And then looking for, comparatively speaking, a good distance to the upside. In fact, for this, we might benefit from taking a look at the higher time frames, right? We could target something like this, which that currently gives us a 1.77 risk reward. And all this is doing is just targeting a key daily chart zone. Okay, so this is an idea. And again, it's contending upon first thing being that break above past resistance here. So if price can break above past resistance, that might be a nice push, retest, continuation up to daily resistance. Now, I want to show you guys, I touched briefly on the edge finder. Let's actually go look at this and go look at the individual factors that are actually attributing to a buy rating on NZDUSD. So we'll go to major currency pairs. By the way, there's pretty much everything you ever wanted in here. We have a lot of different assets in the edge finder now, which has been quite cool. So let's go look at NZDUSD and we'll load this one in. And what we can see here is that we have a total score of +5. And +5, all it means is it just tallied up all the different metrics that we have here and punched out a sum of +5 or +5 on the edge finder. Now, what this means is if we go bar by bar, the COT data, excuse me, the COT data here is showing a lot of bias towards the US dollar still. So that's kind of going against us, right? Again, paying attention to smart money, it's not the most favorable trade. So that might be one red flag, but it's not going to completely kill the idea of possibly capturing a good move for us. Just because one thing says one thing doesn't mean the net is positive or negative, right? So if we take a look at retail sentiment though, the crowd is super short on this currency cross, meaning they're betting that it's going down. And if we know that the retail trader tends to lose money, this is a dangerous bet to take, right? So in this case, that actually gets a positive one, meaning favoring the long side, not the short side. Now, if we take a look at seasonality, seasonality shows us on a historical month-by-month basis what each asset tends to do during the month. And you can see during the month of December, NZDUSD tends to rise. That's a positive factor. The trend is a pretty clear one. We have a strong upward trend in terms of our projections. GDP growth favors the US, whereas inflation, unemployment, and interest rates, all seen in this box here, favor New Zealand. So this gets us a +5 and a bias towards the long side for the New Zealand dollar against the US dollar. Hopefully that makes sense. That's a little bit of a breakdown on how the Edge Finder works. If you don't already have the Edge Finder, by the way, you can get it down below in the description. It is our software company's main product. We sell quite a few different products, but this is our most popular one. It's been a very, very successful project for us, and we've worked really, really hard to get that software out to traders. If you want it, take advantage of the discount code that's down below in the description. Click that link, use promo code YTVIP at checkout, and you can get access to it for a nice discount. So take advantage of that today. Yes, that is my sales pitch, but I never hesitate to sell it because it is something I genuinely use, I genuinely think is valuable, and for many traders, it has saved a tremendous amount of time. So yes, there's no shame in the plug. It is really an awesome tool. So get yourself a copy and use that code if you want it. All right, so let's move on. Another one we talked about or planned to discuss was gold here today. And gold, what you can see, is at a very, very interesting spot off the 4-hour chart. Similar to New Zealand dollar, it seems to be retesting a major zone of resistance around 1808. Right around that 1800 round number play, we've had a lot of resistance for gold. And the question is next week, or I guess this week, can it actually start breaking through and give us the move to get above those 1800, low 1800 marks, right? If we can get up into 1810, 1812, right, that shows a lot of strength from the bulls. And in that case, you might have a nice opportunity to look and break and retest on this one as well. Off the daily chart, this thing looks bullish to me. And yes, you're coming into resistance, and that's why we're having a little bit of struggle. But in terms of this downward trajectory where we had lower highs, etc., we had this big breakout, and we're now doing the opposite. Higher lows, right? I'm looking for that pattern to continue with a break above, retest, and trying to capture another one of those higher lows. Of course, easier said than done. Trading is very easy on the left-hand side of the screen, very difficult on the right-hand side of the screen where you actually have to call the next move. But for me, the main thing I'm looking for on gold is a break above past resistance and then looking for opportunities to retest buy. Now, I also mentioned this There could be another scenario in which case you try and capture some of this pullback in the consolidation zone if you're very, very aggressive. But for me, I prefer the scenario in which we just see a clean break above this consolidation we've seen off the daily and 4-hour chart, and looking for retest opportunities to get long on gold, mostly on a momentum play, on a big turnaround, and with that dollar thesis that we talked about earlier on, right? Being a little bit more on the bearish side of the dollar camp, that means being a little bit more on the bullish side of gold. So something I'm watching myself going into this week is, of course, the gold market. I told you guys I'm in on the S&P 500 right now. Those two trades are of course, interesting to me. And then if I'm going back to the Edge Finder, we'll see if there's anything on the other side of things. Go to watch list. I'm going to go down to the bottom half of this, and you can see we've got Euro NZD, Aussie NZD, and Pound NZD. And Euro NZD was a pretty good trade for me recently, but it seems like it may have left me in the dust. I caught some of the swing here from this move down onto right around here, so I took it short and closed right as we broke through this area. So it was a great move for me. I didn't capture the entire thing, of course, but I caught a good chunk of it, which I was happy with. That trade, by the way, if you want to watch that, it's one of my recent videos. You can watch the trade start to finish. I recorded the whole thing. It was a fun video. So I'm looking here now for Euro NZD to do just another cookie cutter break move and retest. So of course we have major support here where we found a lot of buyers in this area right around 1.6431, right? And now this past Friday, we actually got underneath and closed below those lows, which looks really strong for the bears. The question is though, can we get a little bit more squeeze and then looking for a pullback, right? Something that can get us that 38.2% retracement. That's my ideal scenario. So we would need something. In fact, we could size this up. We could get ourselves a number. This is a cool little trick you can do. You know, sometimes people will say, well, Nick, how much do you need it to actually clear a level to actually look for break and retests? And usually my answer is I like the fibs. I like to see a fib retracement. And of course, it's not magic. It's not a perfect system. It's not a secret formula system for success. It's just a generic blueprint for what I look for. And so if I'm looking at a 38.2% retracement, I need price to squeeze a little bit lower, right? And then give us that swing back, something like this. I hope that made sense, but that's been a nice little way of thinking about it for me is, you know, I like to use the fibs as just a sign of like, okay, the level's been very clearly broken, right? This would be a really big success for the bears, and then any sort of snap back. And this could take, by the way, this could be, you know, Monday, Tuesday, and then Wednesday, and then Thursday, and then Friday. So it might not be something where I'm like, oh yeah, okay, now I just take the trade Monday morning, right? It's something where, or it could be much faster than that. It could be, right, Monday, and then Tuesday we come snapping back up, right? And then Wednesday, right? So that would be the execution plan for something like Euro New Zealand. So I like this one a lot because, of course, not only from the technical perspective does it look good, but the Euro New Zealand, we can take a quick glance across the board. You can see it's very, very red here on the Edge Finder, meaning that all these different metrics are pointing towards bearishness for this particular pair. And so I really like to see that combination of lots of fundamentals, lots of sentiment, and lots of technical analysis agreeing before I take a trade. Right? I spent a lot of time in trading just sort of going strategy to strategy and jumping thing to thing. And what I realized is that there's a lot of value in some of these different indicators that are out there, right? Studying historical tendencies of an asset, for example. By themselves, though, they're limited. Combining them with other things that are also valuable, or what our team here at Day One Trading tends to look at as valuable resources, we can get a much clearer picture about each particular asset. I mentioned earlier that the Edge Finder has many different assets available. You can look at gold, the indices, the stock market indices. You have the major currency pairs, a lot of minor crosses, very, very full of different resources for you to look. You also can track COT data. You can use your market currency heat map kind of thing every single day. You get economic news. It has a Fed tracker, which is kind of a cool feature we've added more recently. It allows you to look at Fed projections, which is quite cool. So if you don't already have the Edge Finder, like I said, take advantage of that offer that's in the description. It's a really cool tool. And I hope you guys have a great trading week. This is pretty much everything I wanted to discuss, some of the trade setups that I'm looking at for myself, and I hope that you all trade safe. Have a great one. We'll see you back next time.